Welcome to Used Car News Podcast. Used Car News is your top source for fast and reliable news that car dealers can rely on for this evolving industry. Here are this month's top stories. Buying centers boost profits for independents. Tesla tops Cars.com's 2025 American-Made Index. Association lobbies against new taxes, fees for auto sales. But first, we'll hear from Melinda Zabritski, Senior Director for Experian Automotive Financial Solutions Team.
Welcome to the Used Car News Podcast. My name is Jeffrey Belant. I'm your host and managing editor of Used Car News. And today we have a familiar voice you're going to hear is Melinda Zabritski, Head of Automotive Financial Insights of Experian Automotive. Welcome, Melinda.
Very happy to be here, Jeffrey.
Yeah, you've become our regulars. We always check in with you at least once a year on your state of automotive finance. And obviously, it seems like every time it's a time to be interested in the state of automotive finance, whether it's we're talking about tariffs or we talk about COVID or something. So this will be your results of your Q1 report, correct?
Yes, correct. We're looking just at Q1 right now.
Cool. Okay, excellent. I said, well, we'll get right into it there. I noticed, and if there's something you want to start off with or you want to butt in and interject if I don't go where you want to go, let me know, okay? But I noticed that banks grew in market share for auto financing during the quarter, and I'm wondering, in terms of compared to captives, are captives pulling back incentives and things like that, or what is that about, or am I misreading that?
Well, we don't directly track incentives, but we definitely noticed, a definite decrease in captive market share when looking at new financing, both for total financing as well as just on new loans. And we definitely saw some, a little bit of increase with credit unions, but the biggest growth was really on the bank side. And there's several things going on there. One is, especially on new cars, we do have some shifts in some OEM lending relationships, especially on the EV front, with some newer relationships going to some banks, and that's really driving some of that share increase.
Oh, okay, very good.
So there's that, but also I've in the last couple months I've probably talked with most of the top banks, and they all have expressed interest in growth and getting more aggressive. So I think we're also seeing that in the numbers.
Very interesting. We're talking. This is new car side or both?
Really both.
Yeah, wow, that's good news. And we're talking about, I don't know if I related the post-pandemic trends, that what I'm talking about there?
Yeah, so, the Q1 report this quarter, as well as some of what we saw in Q4, was really a lot more stabilization in the numbers. During the pandemic, and especially during inventory shortages and chip shortages and such, and high value demand on used cars, we really saw big swings in the numbers. Loan amounts grew tremendously. Monthly payments, on the new side jumped from, $500 to $750 and such.
Yeah.
So, this quarter, we really weren't seeing that. We were really seeing just really a lot of stabilization. The loan amounts, they were up a little bit, but it was very, very modest. We started to see some rates come down. On the new side, we did still have, year over year payments went up, but kind of flat quarter over quarter. And, good news, especially on the used car side, was despite, yes, we had a little bit of increase in monthly payment. It was very modest, less than $100. But the payment came down a little bit.
Yeah, so that was I noticed that. Yeah.
Yeah.
Very good. What about this whole the percentage of financing? It was on page 5 of the report. And again, at the end, folks, we're going to direct you to the Experian site to look at the visuals for the report yourself. But in terms of the percentage of vehicles with financing is dipping, at least on used cars, which I thought was kind of interesting.
Yeah, so we're practically at record lows for financing on used vehicles. Yeah. And the number Jeffrey's citing is, for used cars, we only had financing on about 37% of them.
That's crazy.
Last year it was, over 39%. Year before it was 42%. So, the numbers are decreasing and there's quite a few reasons for that. And the biggest one that I see, and it's not actually in the report, it's something I tend to do separately from this, is we're seeing an increase in consumers purchasing older and older vehicles.
Oh yeah, right.
Specifically, 10-year-old vehicles. And I think there's a lot of reasons for that. And I think a lot of it is around affordability, sure. Especially those monthly payments. If you're a consumer who, and some of the numbers that I see, consumers coming back to market so far in the first part of this year, their last car purchase was a little over 5 years ago.
Wow. Yeah. It's
And
a day probably. Yeah.
exactly. So if you're coming off of the last time, if you bought your car and you were negotiating by payment and you're like, hey, I want it to be $400. If you're looking for a $400 payment in today's market, you're looking at a 9-10-year-old vehicle.
Yes.
Or older.
Crazy. Excellent. Great. I appreciate that. Because like I said, that jumped out at me too. The report shows that independent dealers saw a decreased share of used vehicle purchase. Of course, we don't like that. We like to see used car dealers buying cars. What's going on there, you think?
Yeah, so unfortunately, the trend line I shared in the presentation was just over a couple years. It was 23, 24, 25. And yeah, so when I'm looking at the used car market, I am splitting between what I can identify as a franchise store versus an independent store.
Right.
And the franchise have been increasing their share of the used car market over the past couple of years. And where I really saw it increase was kind of tied to their new car availability. As new inventory was stronger, you had also more used cars being sold with the independents too, with the franchise. So the independent share has come down a little bit, but it's closer to what it was, say, 4 or 5 years ago. So kind of before a lot of the challenges the market faced with COVID and inventory and shortages, it's pretty much back to what it was back then.
Okay, that's good. That's good clarification. Yeah, I think about back when 08 or 10 or 12 or when the new cars dipped, and I always imagine, especially it was around the time the cars. Oh gosh, were they
cash for clunkers?
There you go, cash for clunkers. Thanks for reading my mind. But when that happened, I always got the feeling the franchise dealers, of course, went to used cars really out of necessity, and then they got a taste of that profit margin and thought, "Ooh, we're going to stay here," And I think maybe they go to that in these times.
Yeah, it's there's definitely some growth on that franchise side, but also I mentioned the older vehicles that we're seeing. We're also seeing the average age of the used cars sold by the franchise stores are also increasing. So that older vehicle impact of the market isn't just in the independent space. It's happening market wide.
Now, the other thing we saw, we have talked in the past about credit unions and how aggressive they are in financing for autos. But in your report, it says banks top credit unions as largest used vehicle lender now. So does this kind of line up with what you were saying earlier about banks being more aggressive?
Yeah. So on the used car side, credit unions hit a peak of share back in 2023, and that's really, when the rates went up, they were a little slower to raise the rates, and they put on tremendous market share. Banks used to be the largest used car lender up until that point. And then their share did dip. Like I said, it's been steadily increasing the last year or two. They did inch out the credit unions, but it wasn't by much. I mean, it was very, very close. They're both in the 28% range.
Okay. All right. That's good perspective.
Yeah. Very tiny increase for those banks.
I'm always interested in values and loan to values when it comes to financing. Now, it says here loan to values are down for both new and used loans, despite the values increasing. Why is that? I know it has to do with the financing rates or whatever, but can you explain that?
So on the new car side, it's a little bit more challenging to really dig into it, because for new vehicles, very, very prime market, but also, you do have incentives in there. So when we're calculating things like LTV, there could be more nuances into what's impacting that loan amount when we're doing that calculation. Now, on the used car side, it's a little bit more cut and dry. We did have values increase. They went from 25,000 to over 26,000, which can also help bring down that LTV. But also, it's Q1, it's tax season. So, you do tend to have that impact as well.
That's a good point, yeah.
But then also, again, I mentioned it's been about 5 years since consumers have been back to market. They've been paying on their vehicles. They have more equity, and the used car values are higher today than they were, 5-6 years ago.
There you go. That's a good point. Excellent. Appreciate it. Now, the other thing I saw that, and it was funny, I was just reading something today, and I can't remember what the source was, talking about credit scores in general, but here, average used credit scores are flat year over year. Do you see trends in that related to anything going on in the market, or?
Well, the year over year changes in the credit scores, the increases have slowed down a little bit. Used score was, exactly flat year over year at 684. New was up about 2 points. But on the used side, again, we do have that shift in and the credit dynamics. Most of the growth that we have been seeing has been in that super prime area. The used car market is certainly more full spectrum. You've got subprime, you've got near prime, you've got, all of it. But the biggest growth factors really are in prime. And now my presentation really just looks at like the distribution across the risk tiers.
Right.
But I also dug into the volume. And when I'm looking at volume, really the only risk segment on used cars for Q1 that had a volume increase for financing really is that super prime space. So that's going to certainly have a role too.
Competition is fierce in the used car arena, so how can you ensure that your pre-owned inventory stands above the rest? Success starts with the quality of your leads. Auto Trader for Independents offers products that help drive high-quality leads for independent dealers like you.
Independent car dealers Chris House and Otto Hanna have boosted their businesses through innovative inventory acquisition strategies, particularly buying cars off the street. House, owner of House Auto Sales in Ohio, leveraged Kelley Blue Book leads and We Buy Cars billboards to significantly increase acquisitions during and after COVID. Hanna, from City of Cars in Michigan, opened a dedicated buying center attracting private sellers with quick, hassle-free transactions. These strategies have improved margins, doubled foot traffic, and enhanced customer relationships. Both dealers emphasize community involvement and mentorship, with House and Hanna training their children in the business to ensure future success. Tesla claimed the top 4 spots on the Cars.com American-Made Index, with the Model 3 leading, followed by the Model Y, Model S, and Model X. This marks the 20th year of the index, which evaluates vehicles based on their economic impact in the U.S. The Jeep Gladiator rounded out the top 5, while Honda had 5 models in the top 15. Significant shifts included the Toyota Corolla Cross Hybrids jump to number 18 and the Kia EV6 debuting at number 6. The index highlights how assembly location and domestic parts play a crucial role in supporting the U.S. economy. Oregon lawmakers are considering the Transportation Reinvestment Package, or TRIP, which includes significant tax and fee increases on vehicle sales. House Bill 2025 proposes raising the dealer certification fee from $1,100 to $2,044, doubling the dealer privilege tax to 0.01%, and creating new vehicle sales taxes of 2% on new and 1% on used cars. The Oregon Vehicle Dealer Association, or OVDA, strongly opposes these measures, citing unfairness and their potential to financially burden dealers. OVDA's lobbyist, Darrell W. Fuller, urged lawmakers to revise the bill, address trade and tax ambiguity, and offer payment plans for certification fees to support certified dealers.
Now, you talked about, you always look at credit segments. And tell us what you're seeing in terms of that. This is more on the new car side, but I'm just curious as to what you're seeing.
Yeah. So new and used had some similar patterns. Like I mentioned, a lot of the growth really in super prime, both from a percentage as well as from a volume. It was interesting that, on new cars, we did see growth in subprime. We saw it as a percentage. I'm also seeing it as a volume increase. And even though deep subprime on new is a very small part of the market, right. Volume is up. But, we're still, especially on new has always been very, very prime anyway. But we're still really low on a financing distribution as well as a percentage when we look at the subprime space for new cars. The market just continues to decrease there, continues to become more and more prime. And even though we've got, some growth in the loan space in subprime, it's still not what it was, back 5 years ago.
Well, why is that? Is it the cost of cars or just?
I think there's several things going on. I think there is the score increases that we've seen, or the score increases that we've seen of consumers improving credit. Average credit scores are up for most consumers, so it's pushing them into higher bands. And, we do see that, more and more consumers really do pay off, all their credit debt on a regular basis, and that does help improve those credit scores. So I think we do have consumers increasing and just moving from some of the different bands and kind of just improving their credit just overall.
You talked about this a little bit, but I did find it interesting that it shows both super prime show total loan growth and the market share and then subprime. Now, of course, subprime, I mean, what is the percentage? I don't have in front of me the percentage of super prime of the market share in subprime. I know subprime would be pretty low if we're talking new cars, obviously.
Yeah. So if I'm looking at new cars, like I said, new cars are very much prime. If I look at prime and super prime combined, it's a little over 83% of new car buyers are prime or higher. Over 47% are super prime. And, subprime on the new car side is less than 6%. Well, right around 6%.
Excellent. Now, we discussed leasing trends in the past, and obviously we know things have affected leasing in terms of over a few years, the availability and where it dropped at like less than 20% when it was going up to whatever it was, mid 30s. Now it seems to have bounced back a little bit. So does this tell you anything as it relates to auto financing?
Yeah. So like I said, it's really going to be tied to inventory availability. So whether or not, the manufacturers are offering leasing programs, if there's a lot of inventory out there, you're going to see more leasing on it. Mm-hmm. The last couple quarters, we have seen leasing, close to 25%, nowhere near what it was, again, 6-7 years ago when we were in those 33% ranges. So I see leasing, again, it's just very much tied to inventory availability. And the coming year could be very interesting in what we see with leasing as far as associated with various makes. What is really interesting on leasing is the role that EV is playing.
Talk about that, yeah.
Yeah, so EV growth, we're for new cars, we're just under 10% of all new cars purchased in Q1 were EVs, but they're leased at 60% of the time.
Right.
And the lease rates have really skyrocketed. I think Q4, the lease rate was under 50%. And now we're like at 60%. And EVs are now almost a quarter of all the vehicles that were leased in Q1. So if you think about that from a used car standpoint,
wow. Yeah.
We're going to be getting a lot of EVs coming off lease, really this year, next year, and subsequent, because on the EV front, traditional leasing, almost everything is 36 months.
Right.
But in the EV side, you do see quite a bit more at 24 months. Right. So we started hitting some of those higher EV lease rates, early last year. So later this year, we're going to start getting a lot of increased volume of off-lease EVs.
That is really going to be interesting to see what that does in the market. Like, my guess is obviously it's going to be the price point. If the price point is low enough, maybe people take a chance. Of course, that all depends on market and regions, I assume, too. But that's really interesting. And you're saying it was like close to 10%?
It's just under 10. It's like 9.8%.
Wow, that's talking about pushing it. But you're saying, and the vast majority of those are leases?
60%.
Jeez. Yeah, that's incredible. I guess that explains the number, because I thought, wow, nearly 10% seems kind of high. But of course, it's been such a push, for the last 5 years. So that's very cool. Tell us about, we haven't talked about delinquencies. I thought that was kind of one of the interesting highlights of your report. What are you seeing?
Yeah, so, delinquency is still high. But we did have some good news for Q1. We actually did see 30-day delinquency come down year over year. So that, that very early stage delinquency, like I said, it's still high, not as high as it was last year at this time, but higher than it's been in many years. And 60-day delinquency also, while high, which of course is going to be more severe, fewer people can recover from a 60-day delinquency.
Sure.
The number of loans and leases that were delinquent stayed flat. It's like 0.83%. Again, still elevated, but that was flat. So that was good to see. And the percentage of dollars that are at that 60-day delinquent status came in at like 0.81, which was 1 basis point increase year over year. So not a huge growth, but again, still about 19 basis points higher than it was about 5 years ago.
What does that mean when you say dollars?
So it's when we're looking at this, we have, if you look at the automotive industry, we have right now nearly 1.6 trillion in open outstanding balances. So the total debt of automotive lending out there, it's, almost 1.6 trillion. So when I look at that figure, it's saying, okay, of that nearly 1.6 trillion in outstanding balances, there's about 0.81% of it that is at 60 days delinquent. So,
okay. All right.
Yeah. So that's going to be, the dollars lost, essentially the gross dollars lost prior to then doing repo and taking that vehicle to auction.
Very good. That's interesting. And do you see trends that your experience doing this when delinquencies go, is there like this is usually the cause, or this is usually the issue that you see?
There's so many nuances to it. It's everything from, economic conditions that can occur that could, set consumers back. It's everything from, car prices going up so much, and now, your monthly payments might be out of your budget. So there's so many nuances that occur here. Unfortunately, we don't do consumer surveys on the delinquencies to know, hey, what caused this? In general, most of the delinquencies are going to occur, in the subprime space, lower credit scores, higher likelihood of going delinquent. And that is where it continues to occur.
Was there anything that we haven't talked about that jumped out at you or that you found interesting? Because you see things that, I don't, and the average person doesn't see.
Yeah, like I said, I think we had a lot of it. And I definitely brought up the EV front on leasing, because that to me,
I'm glad you did that. That's a huge one. Yeah.
Yeah, that was especially more interesting, especially when focused on used cars. These are coming, and they're going to be used cars. So that was definitely something I wanted to hit on.
Excellent. Yeah, it was funny. I talked to a guy, he's in Northern California, and he was one of the first guys to start doing like EVs and alternative energy fuel cars. So I talked with him last year, and now he's Northern California. So he's in like, where the EVs and the whole thing is. And he's like 90-something% of the cars he sells are hybrids. He doesn't even, he might have one EV on the lot. Like he'll drive for himself because it's fun. But then there would be guys like I talked to an auction guy who's like ice this, ice that. But he's got the Rivian. I said, so what do you like about the Rivian? He had it just to toy around with, I think more because it came in as a trade or whatever. And he says, man, 0 to 60 in like 4 seconds. That's why I love the Rivian. But it'll be interesting to see. Do you see any trends out in the financing area that could affect one way or the other EVs? Or is it something like we wait and see?
I think it's a little bit of wait and see. I mean, when I look at the EV space, especially on the used car side, there's a lot of lenders out there who are funding used EVs. They're out there. And then there's more and more on the new car side, especially with so much of the leasing where, I am hearing from some lenders who are, increasingly looking at focusing on lease buyouts. And, they're not making any criteria as to whether it's an EV or not. So they're just open to lease buyouts. But with so many EVs being leased, that could obviously, be a potential there.
For sure. Yeah. Wow. That's the whole thing. You think when Tesla had dropped the prices of their Teslas like 20%, whatever year, whatever it goes, all of a sudden the whole market shifted, So it's interesting to see what the status of that's going to be. It's going to be interesting to see what happens in the used market. I know that's probably going to be more regional, I would think. We'll see. I don't know. Boy, this is great, Melinda. Are you looking forward to anything in the future for Experian, or are you just going to plug along with your reports? I mean, do you see anything do you have any shows or any events you're going to be looking ahead to?
Well, we've got quite a few conferences coming up, and, we'll continue to analyze the industry and provide industry expertise as much as we can. It's one of the things that we very much enjoy our position in the market to provide these insights to everybody out there. So we'll continue to focus on that. And the coming quarters are going to be very interesting from an auto finance standpoint. For sure. And of course, with the tariffs, I mean, I know you crunch numbers. It's really, you can't look at a crystal ball. Anybody can't, because the whole thing changes so often. Do you guys look at tariffs? I mean, is it just something, it's just going to be part of whatever factors you look at in the future? We don't necessarily have the data to identify yet, if any increases were caused by tariffs or just market adjustments, et cetera. But we'll continue to monitor and see what's going on with those loan amounts and how any potential impacts will be on the amount finance consumers are financing, as well as what any potential impacts are going to be on those payments. Excellent. Folks, we've been blessed not just to hear on the podcast here, but I know I got to see her at one of the conferences, and it's great to see her in person, and the presentations are awesome. So one, if you're a dealer or even in your auto industry and you see her name at a conference, definitely attend that session. You'll appreciate it. And of course, we'll look forward to the next State of the Automotive Finance report. Folks, look up Experian Automotive, and you can try and seek out that State of Automotive Finance report. It's really good, especially when you got the charts, you can look at things. But Melinda Zabritski, really appreciate it. And you folks at Experian Automotive, thanks a lot for sitting in with us again. Wonderful. Thank you.
Thanks for listening to Used Car News Podcast. Each month, we'll bring you fast and reliable news that car dealers can rely on for this evolving industry. For a free subscription of Used Car News, please go to usedcarnews.com. This podcast is a production of BG Ad Group. Make sure to share us on social media and like and follow wherever you get your podcasts.